The Bank of Japan says it will continue what it calls aggressive monetary easing to avoid a long recession. But policymakers left rates unchanged and didn't add to the $1.1 trillion asset buying fund at the end of this month's meeting. Mike Firn brings us this report from Tokyo.
The pressure is on the Bank of Japan. The economy shrinking, consumer prices still falling. The only thing that's getting bigger is government debt, which is why the bank can't expect much more fiscal stimulus to back up its monetary easing. And with a lower house election next month widely forecast to bring the return of a Liberal Democratic Party government, the pressure is likely to increase. LDP leader Shinzo Abe wants the bank to cut its benchmark rate below zero. And although the bank said last month that its 1% inflation target isn't achievable in the near term, Abe says the bank should target price rises of 2 to 3%. And with global concern about Japan's growing debt, more than 230% of GDP, Abe says the bank should directly underwrite government bonds.
If our objective is to generate inflation and to get to end deflation, and it's not such a bad idea. And if actually the government spends more money and all the money comes from the BOJ, then we have inflation sooner rather than later. But the question is whether the inflation generated by the BOJ's debt monetization can be controlled.
Central Bank Governor Masaki Shirokawa says the economy will remain weak for the time being before a moderate recovery. The Bank of Japan's next meeting starts on December 19th, just 3 days after the national election, which may bring a new government to Japan and increasing pressure on policymakers. Now, many economists say that at the end of that meeting, they will ease monetary policy further. Mike Firn, CCTV, Tokyo.